Bible School Radio, 91.3 KDKR Decatur, Dallas-Fort Worth, and 91.3 KYJC Commerce.
Portions of KDKR programming do not necessarily reflect the views of this station, its management, or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, if you are a non-filer, the IRS just might be coming for you. Today, what you need to know. Stay tuned for Prudent Money. Good afternoon. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Well, the IRS is going after non-filers, and IRS expert Dan Pilla is here to tell us what we need to know. Dan, always good to have you on the program.
Yeah, it's always my pleasure to talk with you here, Bob. How you doing?
I am doing great. So let me ask you a question. Does this slow down at all with the IRS during the summer, or is it every day of the year?
It goes on every day of the year. I like to say that April 16th is the tax audit season opener. And it's not just audits, Bob. It's collection as well. You know, the collection machine goes on all year long.
Yeah, I would imagine that you always have your hands full. So that's good. It keeps you out of trouble. So tell me a little bit.
It does mostly keep me off the street. Yes, sir.
So let's talk a little bit about this situation with non-filers. I mean, talk about who they are and how big of a problem this is.
Well, it's a huge problem, and it always has been a huge problem. This is really nothing new. As far as numbers, you know, we don't know the actual number of the total non-filers that are out there. However, the Treasury Department's research team has identified about 11 million non-filers, Bob, and they've done that by matching or attempting to match, I should say, information tax returns, W-2s and 1099s, with income tax returns. So this is how they identify a non-filer. If there's a W-2, for example, that shows that a person made $60,000 as a wage earner, and there's no tax return for that same year, the IRS knows that that person's a non-filer. They've got an obligation to file a return. We don't have a return on file, and so therefore you're a non-filer. But that does not address the unidentified non-filers, the people that don't have W-2s or W-4s, W-2s, I was right the first time, W-2s and 1099s on file with the IRS, so they can't do the matching. The IRS has no idea how many people those are, and I can tell you it's millions more, Bob. So, you know, we could be talking about 20, 25 million people here out there that have not filed tax returns that probably should have.
Just out of curiosity, and this I know is a speculative guess, if you want to call it that, but how long can somebody, do you think, can they get away with non-filing?
Well, it is a speculative guess, but I'll tell you something. I've seen people go 15 and 20 years without filing tax returns, and then I've seen people go 3 or 4 years before the IRS catches up with them. You know, the problem with non-filing a tax return is you're never out of the woods with respect to that return. In other words, there's no statute of limitations on the IRS's ability to assess a tax against you if you haven't filed the return. They can go back 3 years, 6 years, 10 years, 20 years. They could theoretically go back to 1913 when the income tax law started to chase delinquent non-filers. You know, if you're 114 years old, the IRS may say, well, gee, you didn't file a tax return in 1920. What the heck? That's obviously not going to happen, but it is legally, theoretically possible that it could. And so, you know, people get frantic, and they, you know, they don't necessarily know about these rules that I just expressed here, but they certainly know that if they didn't file a tax return, that the IRS could be looking for them.
Well, just out of curiosity, does everyone have to file, even those who don't owe taxes?
Well, the answer is no, but not for the reason you just expressed. The filing of a tax return has nothing to do with whether you owe taxes or not. The filing of a return is triggered by the receipt of income. So if your income over the course of a year is above the filing threshold, then you have to file that tax return even if you don't owe a penny in taxes.
This is Bob Brooks, and you are listening to the Prudent Money Radio Show, talking to Dan Pilla. If you got any, or you want any information on Dan, go to taxhelponline.com. I was reading your monthly letter, Pilla Talks Taxes, and what was interesting to me you wrote that non-filing could be criminal and lead to jail time. How could that be the case? What would have to happen?
Yeah, that's a good question, because a lot of people automatically think that if they didn't file a tax return, they could go to jail, and that's mostly not true. In order for a person to end up in jail for failure to file a tax return, the IRS has to prove three things. Now, remember, when we're talking about a criminal case, the burden of proof is on the government. When we're talking about the civil case, the burden of proof is on the citizen. But in a criminal case, if they're going to allege that you are guilty of a crime with respect to non-filing, they have to prove, number one, that you were legally required to file the return. Secondly, that you failed to file the return. And third, they have to prove that your failure to file was willful. All right, that is to say, it was done as a voluntary, intentional act, and it was done specifically for the purposes of violating the law. All right, this is an essential element that's built into all of the criminal statutes in the Internal Revenue Code. This concept of deliberately violating the law. In other words, your action is not due to negligence or inadvertence or mistake or the fact that you were broke and afraid. It's not due to any of those reasons. It's due to the fact that you made up your mind that you were going to break the law, and you did it deliberately with the purpose of breaking the law. Well, Bob, you can imagine that's pretty hard to prove.
Sure.
Number one. And secondly, the overwhelming majority of people don't fall into that category anyway. They fail to file the return not because they're criminals. They fail to file the return mostly because they don't have the money to pay. Well, that makes you broke. It doesn't make you a criminal.
Well, it would seem like that it would be a pretty tough task to prove that someone deliberately, intentionally didn't file their taxes.
Yeah, no question about it. As I said, that burden to prove willfulness is very specific, and it is a tall order for the IRS to meet. And that's why, Bob, in the grand scheme of things, failure to file the return is just one of the criminal penalties in the Internal Revenue Code. There's a dozen or so. We always think in terms of tax evasion, right? But that's just one of them also. Filing false statements and deliberately attempting to interfere with the administration of the tax code. There's all kinds of different things. There's 12, 15 different offenses or more, maybe 20 different offenses in the Internal Revenue Code, but every single one of them carries that willfulness burden, that burden for the IRS to prove deliberate criminal intent. And that's why, out of the 160 million tax returns that are filed every year, it's be north of that now, there's really only about 1,000 or maybe 1,500 criminal cases that are brought into the courts every year. It's just not that many.
Now, the IRS this is interesting, can conveniently file a return for you. Now, this could not come out in your best interest. Talk about that process.
Yeah, that's exactly the risk that the overwhelming majority of non-filers face. They're not going to face criminal charges, but they are going to face or likely face a so-called substitute for return. And what that means is that under the tax code, the IRS has the authority for a person who didn't file a tax return. The IRS has the authority to file a return for that person. It's called a substitute for return, or an SFR. And what happens is, under the law, the IRS is able to use what the statute refers to as, quote, available information, unquote, to prepare a return for you. And they do that, Bob. They can use information returns like W-2s or 1099s. They could use Bureau of Labor statistics. They could use inflation adjustment numbers. They could use a Ouija board, Bob, to figure out what they think your income was for that particular tax year. And they prepare a return with no exemptions, deductions, credits, nothing. And they send you a bill for that, of course, with the penalties and interest built in, and they expect you to pay that bill. In that situation, the burden of proof is on the taxpayer to prove that the IRS's calculation is wrong.
I can't get that visual out of my head, the Ouija board and the tax agents. So talk a little bit about, you said that this was this has always been a problem, but the pandemic made it a huge problem, and then it led to this initiative. Talk a little bit about the timeline, what happened, and what this new initiative.
Yeah, the initiative was launched in February or March of this year. It's not very old, a couple of months old, and basically the IRS got its money, as you know, got their $60 billion dollars in supplemental funding that was passed by Congress in 2022. And so, what are we going to do with the money? Well, let's chase non-filers. We've got this what amounts to low-hanging fruit out there with all these people we know haven't filed tax returns, and all we got to do is send them a letter to shake the tree. And so the IRS started out this non-filer initiative, and they're mailing out these letters, millions of letters to people. Well, not millions yet, but hundreds of thousands of letters have gone out to start with here, and they're sending these letters to the known non-filers. They're starting with the higher income folks and working their way down. And the letters say, hey, dear Mr. and Mrs. Smith, we've got evidence. Well, it wouldn't be Mr. and Mrs. Smith necessarily, because it would be the individual taxpayers with the information returns. But the point is, the letter's coming out. It's saying we've got information that shows that you're required to file a return. Our records don't show that you filed a return. We want a response. And they're asking you for a specific response. And that response it can come in a number of different ways, not the least of which is, hey, I'm filing my return here. Yeah, you're right, I didn't file, and so, here's my tax return. So that's what the non-filer initiative is, Bob, is this now putting legs to this idea that we've got to chase these non-filers to collect the returns and the money that's owed.
Just out of curiosity, you said that they're sending out hundreds of thousands of letters to taxpayers who are non-filers. Do they actually have the capacity to deal with that type of number?
Well, they're telling us they're sending them out. I have to believe they have the capacity. As I said, they got the $60 billion in supplemental funding, and a good chunk of that money is going toward computer updates. Bob, let's understand here that they've always had a non-filer initiative that's been going on for all of the 40-plus years that I've been in this business. So this is nothing new. The only thing that's new is that during the COVID years, the IRS really kind of shut down its notice program. You'll recall, you and I have talked about this many times in the past, that as of about January of 2023, maybe a little sooner than that, middle of 2022, the IRS was covered up with about 35 million unprocessed documents. Right, those were tax returns and incoming letters and all that. And the IRS was just completely overwhelmed. They couldn't get this stuff done, and which was one of the arguments they made to Congress why they need all this additional money. Well, during that program, their outgoing notices shut down. They turned the switch off. And they thought to themselves, well, one way to get on top of the backlog is stop mailing letters to people, because then they'll stop responding to us, right? So that's what they did. And this went on for several years. They started this at the end of 2020, and it went on all the way through 2023. And then at the end of 2023, going into 2024, they said, well, the notice machine, we're turning back on again. And part of that notice machine now is this new non-filer initiative. We're going to mail out thousands and thousands of these notices to these people that we know of that haven't filed returns.
So they're going after high-income taxpayers. How do they define what a high-income taxpayer is?
Well, that's a good question, because the Biden administration has been using this $400,000 number ever since January, February of 2021, when Biden took office, and they started their we're going after rich people program. The problem, Bob, is the overwhelm, and so the first wave of notices that the IRS has sent out is they tell us is targeted at those folks that are earning more than $400,000 a year. All right, so there's about 100,000 notices going out to folks earning between $400,000 and $1 million that haven't filed, during about a 5-year window of time, and so that $400,000 number sticks there. But here's what people need to understand: the Biden administration's definition of high income is $400,000. The IRS has always used its own definition of a high-income taxpayer, and that's anybody earning more than $100,000 a year. That's been in the IRS's policy, Bob, for an awful long time, that $100,000 number. So if anybody thinks that they don't have to worry about this because, they're not making more than $400,000 a year, they're just not being realistic. And here's the other reality, is that I talked about the Treasury's research numbers earlier, identifying all these 11 million people that haven't filed tax returns. Fewer than 10% of those people are high-income people by the IRS's definition.
Sure.
So never mind the 400,000. Fewer than 10% of those 11 million people are making more than $100,000 a year. So don't believe that they're not coming to shake the tree with regard to your missing tax returns just because you're not making more than $400,000 a year. It's just not a realistic expectation.
It's interesting you bring that up because I remember an article you wrote. This was some time ago, that the IRS was talking about an initiative and they're coming after high income folks and this kind of thing, and then it said the Biden administration would like to remind, not enforce, but remind the IRS that their definition is 400,000. I remember that as it was yesterday.
Yeah.
And so kind of problematic. You got the Biden administration saying one thing, and you got the IRS doing what they've always done. It's two different things.
There's just no question about it. And the other reality is, Bob, there just aren't that many high-income people out there, and the overwhelming majority of high-income people file their returns and pay their taxes because high-income people have accountants and have attorneys and have financial experts at their fingertips that they can rely on to do this stuff. It's the low-income people that have the trouble with compliance.
So talk a little bit about the process. They send a letter out. What's the next couple of steps that follow that?
Yeah, that's a good question. So they'll send the letter out, and the letter is identified as a CP-59 notice, and the CP-59 notice comes to you and it says, our information shows that you were required to file a tax return, but you didn't. All right, or at least our records show that you didn't, and that's an important thing. There's an awful lot of people that get these non-filer notices that actually filed their tax return, and the IRS misprocessed it. That happens all the time. So what the IRS is saying in their letter is that our records indicate that you didn't file a tax return, and then they ask you for a response. All right, now they ask you to submit a form in response to the letter, and the form is IRS Form 15103. That's Form 15103. It's a very simple form. It's a one-page form, and it allows you to do a couple of things. Number one, you can explain that the return was already provided. All right, you already filed the return. Here's a copy of it. The second thing you can do is explain why you believe you aren't required to file. Again, just because the IRS has got wage information on you doesn't mean that you're required to file a tax return. All right, your income has to exceed a certain threshold before you're required to file. All right, so you can explain why you're not required to file a return. Or the third thing you can do is file the return by the due date and provide the tax return along with the Form 15103. So those are the three options you have. I either file the return, here's a copy, I'm not required to file a return, or here's my return, I got it prepared, now it's filed. So that would be the three options.
So talk a little bit about, and this has a little bit more complication than it sounds like it should, this question, but how far do they go back?
Yeah, that's a good question. I told you earlier that they have the legal authority to go back to 1913. Well, we both know just from a matter of reason and common sense that they're not going to do that, all right? They're not going to try to knock on somebody's door and say, where's your tax return for 1973? That's just, it's not practical, and they're not going to do it. And the IRS has a policy that they've lived with for an awful long time, Bob. And this policy has been in place for as long as I can remember. And that is they generally don't go back more than 6 years to chase delinquent tax returns unless there's unusual circumstances. So this comes as a great, as news of a great relief to people, because if you're one of those folks that hasn't filed for 10 or 12 or 15 years, the simple thought of collecting records of your income and expenses from 12 years ago is daunting and overwhelming to people.
Oh,
How
yeah.
am I possibly going to do that? Well, the answer is you don't have to. In the overwhelming majority of cases, the IRS is not going back more than 6 years unless there's unusual circumstances. Now, again, this is a written policy statement from the IRS. This is not just my opinion based on experience, right? This is their written, published policy statement that has been in effect. I've been in this business for over 40 years. It's been in effect for as long as I've been doing this. So this is pretty reliable, pretty safe bet that you're not going to have to go back more than 6 years, again, unless there's unusual circumstances.
Now, once again, I want to give out your website because there's a lot of great information there, taxhelponline.com. Real quick, I could see a taxpayer who has not filed for many, many years is sitting there thinking, well, maybe I'll just let them contact me. I know I need to file, but maybe I'll just kind of sit back and maybe they'll miss me. Maybe they won't catch me or whatever they're trying to reason. What would your advice be to somebody that's sitting in that situation?
Well, I would tell you get the returns for the last 6 years filed, and if it's a financial problem, which it almost always is,
right.
People don't file the return because they decide, it's too much work. They don't file the return because they don't have the money to pay the tax, right? That's the reason. And so if that's your situation, file the return and use the IRS's settlement programs. They've got a number of different settlement programs. The Offer and Compromise is the flagship one, and this is the program that allows you to go in there and negotiate a settlement. They will play ball with you, Bob, if you get these delinquent returns filed and you get back on the beam with your current tax liabilities. But if you're not current, if you have these delinquencies and you're not paying current taxes, they won't play ball with you. So my advice is get current and get yourself into a situation where you can negotiate a settlement and get them off your back and out of your life.
Got about a minute left. I want to talk about a book that you wrote called How to Get Tax Amnesty. Talk about how that could help.
Well, I'll tell you, there's a chapter in the book called the Non-Filer Program, and that's the chapter that explains exactly how a delinquent person will get current with their delinquent tax liabilities. It explains this 6-year rule that I talked about. It explains how to step forward and get your returns resolved. And then I also have a chapter in the book that specifically describes the 4 different Offer and Compromise programs and how they work. There's also a chapter in the book showing you how to set up and negotiate and set up an installment agreement with the IRS. So this is the book that will help you resolve this kind of situation if that's what you're dealing with.
Great information, Dan. And once again, that website is www.taxhelponline.com. Looking forward to talking to you again next month, Dan.
My pleasure, Bob. Have a good week.
Yeah, you as well. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. I do appreciate it. Probably the greatest overall advice that I think Dan gives when it comes to dealing with the IRS is just having a good idea of how it all works, how the information works, being informed. And that is what he is clearly does through his website and, times when he comes on the program. He comes on the program once a month, usually this third Wednesday of the month he comes on. And so, but great information. And once again, that website is www.taxhelponline.com. Well, this is Bob Brooks. You got a question for me, please go to the website at prudentmoney.com and send it in because we are all out of time. Till we do meet again next time. Keep the faith and have a great rest of the day.
That's all the time we have for today.
questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.